As promised, let's get chatting with the management of GMDC. They posted a rather good set of numbers in a seasonally weak quarter. The revenue has increased, the margins as well expanded on a year-on-year basis, though on a sequential basis, it came a little bit lower. The mining business did well. The little bit of a problem or a hiccup was in the power segment. Well, to understand more what went on in the past quarter, we are joined by Mr. Roopwant Singh, the MD of the company. Hi, Mr. Singh. Thanks so much for joining in. Well, a two-part question. One is on your volumes. Earlier, you were talking about close to around 10 million tons approximately. So, do you think that that's still on the cards, going by demand on the ground? Point number one. And since it's a seasonally weak quarter, you see your consolidated margins come down. It's come down to around that, early 30s. What is the steady state margins we should look at from here on? Go ahead.
Morning, Nigel. Appropriately, you've said this is a seasonally weak quarter. This year, we were hit slightly harder by the monsoon. And because of torrential rains and spread over all the three geographical regions, a threefold increase in the number of rainy days. So this water was on the production side much weaker than last year and slightly more weaker than what we had ambitiously planned. So we are looking at making part of the deficit up in the coming 2 quarters, but I think we would have to relook the 10 million ton figure because there are other constraints also. And but if you look at the half-yearly performance of the company, Q1 was our strongest and best ever, and the numbers of this quarter are much better than any time in the past. So we have clocked in the best half-year till now. So that is heartening news for us.
Mr. Singh, good morning. So you said you'll have to relook at your guidance for the full year. If not 10 million tons, how much do you think you could do? And what are the other constraints that you just referred to?
Other constraints are, there's a physical capacity of a mine, a number of machines that can actually move in a certain amount of an area. There are constraints of various permissions, mining-related permissions and environmental-related permissions. So the production in a certain month or in a certain week cannot go above a certain level without breaching safety and other norms. So those are operational and statutory constraints. And yes, we would be doing much better than what we did last year, but there would be a correction from this 10 million ton.
How much could it be?
Sonia, we'll discover at the end of the third quarter.
Will it be 9.5 million tons? I mean, give us a brief number, Mr. Singh. You've been on the front foot normally, and the street likes that as well. You said you'll do 8 million tons last year. You have achieved most of those guidances. Now,
so
because
we said we'll do 8. We did 8.5.
Yes.
We've set out an ambitious target, but these rains have hit us well. So we will be well above 9. So that is our goal.
Between 9 and 10, basically. Then, all right, Mr. Singh. Good morning. The big trigger, obviously, is the entire rare earth project. Could you tell us where is that project at this point in time? What are the latest developments?
So, Prashant, we had kick-started a strategic study. One of the biggest names in consulting was enrolled. The strategic part of that study is over. Now we have rolled out the second part. You would have seen the RFP in the market. We plan to onboard an international firm or a firm with international credentials to do a scoping study. That means a techno-economical viability. So we have moved to stage 2. Yes, and work on the findings of the first stage would now be commenced.
Okay. That report is out, right? Has been tabled. You have the report, BCG.
It's an internal document.
Okay. All right.
Mr. Singh, I asked you about margins. What is the sustainable margins? And also this rare earth opportunity, it's looking very fancy. But we want to know what is the timeline? By when will your shareholders see some kind of revenue? And also, are you looking at bringing in a partner for this rare earth vertical?
At the moment, they are classified as strategic minerals. They come under the similar kind of controls that are there on atomic minerals. So this asset, yes, has to be a special purpose vehicle yet has to be formed. Yes, this asset has to be firmly secured. So by the end of this financial year, we would have a clear guideline on the roadmap that we would be taking. Yes, it is a broader project where an asset is going to be developed and an estate also is planned to be developed, where we would be welcoming private partnerships to make Gujarat a RE hub for processing and value addition.
And margins? Steady state margins,
for
Mr.
this-
Singh. For steady state margins from here on. Not for this project, for the company.
Well, Nigel, you know our numbers. You had seen last year. You should see an improvement, significant improvement on that.
From 32%, the previous quarter it was 38%, earlier it was 40%, it came down to 32% because obviously there were some issues in the power business as well. But from here on, improvement would be what, 35 to 40%? Should we work with that margin?
I can't quote a number, but we should end this year much better than what we did last year.
Okay, and in the in the power business that Nigel was referring to, after a few quarters, it dipped into the red again. So there's been losses in that business. Any kind of recovery that you're expecting?
Sonia, it's very simple. We have two kinds of assets. One is the conventional, the thermal asset, which has been bleeding us and which is a source of problem. We are trying to put that asset back into action. But since for the past 16 years, we've not spent any money, we've not worked on that asset. So that asset in the coming 12 months would see shutdowns and you would not see the kind of margins that we desire to see. But in 12 to 18 months from now, you should see that asset working very robustly and well. For that asset, the plan is to arrest cash burn. For the non-conventional energy assets, the relationship with our vendors, our partners was not right. So we are in the process of correcting that. You would see RFPs floated to select new partners, and earlier ones are also welcome, but a new term of engagement.
Right.
So you should see greater improvement there, and that one, the conventional would take some time.
All right. On that, you said it's an internal document, right? The consultant, which the report that they came out with. Can you tell us some idea of what kind of reserves there are and which are these metals? I mean, or that is also under wraps now, for now?
Later probably.
Okay.
Later probably. But these are critical minerals, which would the value would be brought from the value would be derived from those minerals which would go into permanent magnets, which fuel the growth of non-conventional energy and electric vehicles.
All right, we leave it at that, sir. Thanks a lot for fielding all of our questions.